Okay, viewers, let's move away from one earnings candidate to the other. We have the CMD of Carysil joining us, Mr. Chirag Parekh, on the show. Carysil, inline set of numbers coming in for the second quarter. That stock is under pressure today, but all round a decent set of earnings coming in. Let's get a better understanding of the financials for the quarter gone by and the outlook for the quarters to come as well. We have the management who's joined us on the show. And Mr. Parekh, hi, good morning, and thanks for your time. Let's talk about your margins first. And EBITDA margins have expanded this time around despite new investments and higher costs on the back of your capacity expansions, of course. Help us understand what's driving this operating leverage and how sustainable are the current margin levels once the new capacities come online.
Yeah, hi, thanks for having me on the show. So, like I said last time, I think we have a great product mix and we have a great customer mix. I think the large deals, what we clicked last time with IKEA and with Lowe's, have helped us to drive our per piece realization. We have launched a lot of new models and entered new markets with better margins. While I say that, there's a tremendous automation happening in our manufacturing sector. So I think everything put together, a great product mix, new clients coming with better margins at the cost levels in our company is what driving the margins.
Raw materials, what's the sense with regard to that? What's the outlook?
Yeah, that's a good question. So like as you know, out of the 5 global manufacturing or the quartz zinc companies, we are the only one in Asia, and we are the only ones who have done a backward integration of manufacturing our own quartz. Quartz is about 70% of the weight of zinc, which roughly calculates to about 50% of our costs. So we have the tremendous cost advantage as far as quartz is concerned. So we see very, very stable prices in that. And point two, acrylic MMA, which is another large portion that goes to our sinks. The price been very stable, and with the issues happening, the geopolitical situation, I think it's going to be stable. It is not going to drive the input cost. It's not going to drive up our input cost.
Okay, and Mr. Parekh, let's talk about the tariff narrative from the US. Now, I remember recently when the kitchen cabinet tariff was imposed by the US, your stock took a little bit of a beating, even though you do not operate in that segment. On the back of this news coming in from the US and your overall outlook on tariffs, give us a sense on how your US versus non-US business mix is shaping up, and what is the outlook for your US subsidiary, because that has also turned PAT positive in the second quarter.
Correct. So I do remember last time when we had quarter 2 and we had some great quarter 1 numbers, and at the same time the tariff was announced by the US, and people thought that that our stock, our company's performance is going to hit in quarter 2. I think we as a company are a very resilient company. I think we have come out very strong in spite of we've been hit by the tariff. And I always say that I think we have a fantastic relationship with our US customers. We have kind of cracked the deals with all our customers. We have spoken to every one of them, and we have come to a great understanding. So I think, that's point number 1. The 2 is US is about 30% of our business. Post, I think the tariff, which hopefully is going to soon to go, we will see, I think then we will see changing our gears in the US market. It's a great opportunity in the US. As you know that we have clinched a large deal with one of the large home retailer, Lowe's. So we see a tremendous potential in the US in the coming quarters. Yes.
If I can understand IKEA, you mentioned IKEA very briefly. What does this do to your overall mix? I'm just trying to understand how significant this is to your overall mix in terms of top line. This relationship which you are now building on, where IKEA is concerned, what does it do to your top line? How much of growth does it add to you? And how does the mix change? You're predominantly global at this point. Does this tilt things in favor of domestic, and by how much? Give us a sense.
Yeah, so, IKEA, I think, is a significant deal what we have clinched with IKEA. We are very happy that, a few years back, we became a vendor to the IKEA business, which is a completely non-US. It's a global business, but it's a non-US business. We had about 20% of the global market share, I think, which we have now jumped to about, we got a reward of 70% of the global market share of IKEA, which is going to have a significant impact on the business side and on the margin side, because IKEA is going to help us to, it is going to be a key customer for us. It is going to be a large portion of our exports, and we're happy that IKEA will be taking over probably one of the largest customer, which is again a non-US business for us. Yes.
Okay, and you've also announced capacity expansions in both your stainless steel and kitchen appliances lines. Give us a sense of how this additional change in Carysil's product mix and margin profile, how is this going to look in the next 18 to 24 months? And if you could share the timeline for the commencement of your newer capacities.
Yeah, sure. So, like we always said that our vision is that we're going to be a one-stop solution. So as where we grow as a company, as a quartz sink, people are very excited to buy stainless steel sinks from us. We have put in a lot of investment. We have put in a lot of technology to build the stainless steel units, as in par with the quartz sinks. We have started now with large OEM business in India with some global customers. We have some great export inquiries for this. So we see that the stainless steel division is going to tremendously grow. We are going to expand, I think, by another 200,000 sinks capacity by next year. We just announced that we acquired our land. We already started our building. And we are going to make high quality stainless steel sinks. It's not going to be a typical commodity stainless steel sinks, which again is going to help to improve our margins. Appliances is something which we started a few years back trading, and now with this BIS certification coming in, I think we see a great opportunity. We announced about, if I remember, I think 50 crore approximately capacity to put manufacturing and assembling of the built-in appliances. Reason we are doing this is because we see a huge traction in the Indian industry, and plus OEM business and plus export business. So I think it's going to be a exciting journey for us as a one-stop kitchen solution.
Point taken. So let me take a step back. You traded around 2,700 crore in terms of market cap. I'm trying to get viewers a better perspective, a better lens into how to look at Carysil. So you've guided for 15 to 20% growth. It seems like you're comfortable with that number. Would it be fair to say that in the next 3 to 4 years, you double in terms of your top line from the current 816 crore? You go to around 1,600 crore in the next 3 to 4 years, and you will therefore deliver a margin of 19 to 20%. Are you comfortable with that visibility?
So again, I think it's a good question, kind of putting me into a spot here. But I think, like I always said, that now we did $100 million. We're closing to 1,000 crores this year. I think we are now working on how do we bring in another 1,000 crores to the table, and that's what our efforts in. We really want to get another next 1,000 crores. It's not that number matters to us, but it's 100%. We want to see, we have as a company, a massive potential to move forward. We feel that the next 5 years are probably going to be the golden era for our company. So we are targeting by all ways, try to see that we try to get in another 100 million or about 1,000 crores within less than 5 years.
Okay, so that sounds optimistic, and we hope to speak with you in the future as well, Mr. Parekh. Thank you so much for joining us today.
Thank you.
Okay, viewers, on that note, we're completely timed out on this edition of First Trades. The markets continue to be somber, 0.3% lower and still sub 25,500. On that note, it's a goodbye from Harsh, me and the team that put this show together. Thanks so much for tuning in. Midcap Masala takes all the action forward, so stay tuned to ET Now.